Hi everyone, Professor Lee here. Over the last few years, I've seen students claim hundreds of thousands of dollars of education credits that they missed or would have missed had they not applied the strategy I'm about to show you in this video. And this is the American Opportunity Credit that applies to undergraduate students in their first 4 years of college that haven't gotten a bachelor's degree yet. And what this credit entails is you're getting your tuition minus your scholarships, and you get a credit based on the tuition paid. The number one reason students miss this credit is when they have scholarships and grants. Last year I had a married couple that received an additional $4,000 when applying this strategy that they would have missed out on had they not applied it, and it involves them having scholarships and grants. You can see John, the husband, has tuition of $11,154, scholarships and grants of $19,000. If you net those two, you have a negative number, so you don't get to claim the American Opportunity Credit. Well, the same applies for his wife, Jane. $10,000 in tuition, $20,000 in scholarships and grants. When you net them, obviously is in the negative as well, so they're not able to claim the American Opportunity Tax Credit. This is a situation that many fall into, and there are strategies you can use to decrease the scholarship and grant amount that you're using for the calculation in order to take or maximize the credit. So that's what I'm going to show you in this video. It involves recognizing certain scholarships and grants as income. And this is even, the IRS comes out and says this, you can maximize your credit. They want you to get the max credit, and they're telling you how to do it. If you have scholarships and grants, you may need to recognize a portion of those as income in order to take the credit. The problem is tax software doesn't do that for you. So you put that 1098-T into your tax software, and guess what? It's going to say, oh, you don't qualify for the credit. Well, I'm going to show you how you could potentially qualify. And I built a tool where you can estimate for the last 3 years whether you got it or not, okay? Disclaimer. Obviously, this is for your knowledge to give you an estimate. This isn't tax advice. I don't want you to rely on what you find out in the calculator. You need to seek professional advice or research it on your own, whether you qualify or not. I've built out the tool so it's really good, and it will weed you out with most of the rules, but they're not specifically applicable to your situation. So reach out. You have my contact information and the link in the description, so reach out if you have questions on it, but at least go through the calculator to get an estimate of if you qualify or not. So let's jump in, and you can see again in the link to the description, here is the form I want you to go through to see if you qualify. And I'll walk through this as an example for this married couple from last year to show you how this applied to them. So we're going to look at the year 2023. If you want to do multiple years, just do it 1 year at a time, okay? So we're going to start with 2023. Walk through, and if you have 2022 and 2021, do it as well. Okay, I've seen students get almost 10 grand in 1 year by amending 3 years and claiming it in the 4th year. Okay, so 2023. Here's another disclaimer. Okay, if you are on Medicaid or you qualify for the Earned Income Credit or the Premium Tax Credit with your health insurance premiums, email me for additional assistance, because by increasing your income, it could affect these other benefits that you're receiving, and I don't want you to run into issues with that. So look into that if you qualify for any of those. If you don't have to worry about it as much. And then there's that disclaimer I shared with you. So enter the following information from your 2023 tax return. So let's just start with your email, John Doe, okay, gmail.com, John Doe, spouse Jane Doe. And what's your filing status? We're going to do married filing jointly. And you can see how this calculator works. If you're married filing separately, if you're married, you cannot claim the credit, and you'll just get kicked out of the calculator. Okay, so go through, and it'll kind of get you through your situation. Were you claimed as a dependent on someone else's return? If you were, they have to go through the calculator because they have to claim the credit, but you have to recognize income on your return potentially, so you almost have to work together going through this, okay? But if you're not, like the married couple was in this case, but no. How many college students are included on this tax return? They had 2. This husband and wife are going to school, and this estimate is for the taxpayer and or spouse, not the dependent. So hit next. Let's see if you qualify for the American Opportunity Credit. These are the things you'll need as you're going through this estimator: your 2023 tax return, your Form 1098-T that you get from your university that tells you your tuition and scholarships, and then the scholarship and grant detail. Usually it's included with your 1098-T. Underneath it, it has a detail of your tuition paid, a detail of your scholarships and grants. We need that detail to know, can we actually recognize those scholarships and grants as income or not? Because there's some we can't, okay? So you need all 3 of those. First student's name, we have John. You're in school, let's say they're both seniors, okay? Age 19 to 23. The age matters more if you're not married because you can potentially not get the refundable credit. So go through and answer each of these questions. Do you have a 1098-T? You need it in order to claim the credit. If you don't have it, there's exceptions to where even if you don't have it, you can still claim it, but just answer the questions accordingly. They had a 1098-T, okay? So with John's box 1, remember, let's jump back. John Doe, payments for tuition was $11,154, so we're going to do $11,154. Box 5 is scholarships and grants, $19,171. So we'll do $19,171. Is there a number in box 4 or 6? If there is, that means there were adjustments made to your tuition and scholarships from a prior year 1098-T that need to be adjusted in the current year. If that's the case, if that's a yes, if you claimed your credit in the previous year, you need additional assistance. This estimator can get you a close estimate, but you still need to make adjustments for the other credits potentially. So keep that in mind. But let's just put no, there's no number for now. Hit next. Cost of books and other required materials. If you're claiming the American Opportunity credit, this is going to be, it has to be required books. Okay, so for John, he had $525 of required books in the syllabus. You need this book for this class and other course materials. Were there any distributions from like 529 accounts? So did your parents open a 529 account for you to help pay your tuition? If you did have those are treated like a scholarship for calculating the credit, where it decreases the amount of your expenses. Keep this in mind. If you did have distributions, put the amount. Let's say you had $1,000 from a 529. You can use 529 funds for more than just tuition. You can use it for rent while you're at college or meals, etc. So put those amounts in, and if those amounts exceed the amount you distributed, then it's not going to affect your calculation, okay? So, but we have scholarship income, $7,492. Why is that? So, or scholarships and grants and other student account distributions that exceed rent and meal costs, subtract tuition and fees and books, and you can see you have scholarships that exceed that amount, so that's income to you that needs to be recognized on the tax return. If you didn't do that, you may have done it incorrectly. I get this all the time. Student comes in, they're like, I was doing my return, and in TurboTax or whatever tax software I was using, once I put in my 1098-T, it said I owed more money, or it decreased my refund, so I just took it back out. I'm like, you have to put that back in, because technically, if you have scholarships and grants that exceed your tuition, that's income to you, and you need to recognize that as income. So you may need to amend to claim more tax, right? But the good news is a lot of times, even though you're claiming that income, if you claim a bit more, you'll still increase your refund. Okay, and that's the situation with John and Jane here. So we'll hit next. Second student's name, we have Jane, and she's a senior, 1923. Does she have a 1098-T? She does. What is on her 1098-T? Let's jump back to our 1098-T. $10,354 for tuition. So $10,354. And then scholarships and grants is $20,495. Box 5, $20,495. Okay. Is there a number in box 4 or 6? We're going to put no here. We talked about that already. Hit next. She had books of $472 and didn't have any distributions from other accounts. So she has scholarship income of $9,669. Okay. So now let's verify that that was done correctly. We're looking at a prior year right now. Pull out your tax return and say, okay, did I do that right? How would you know? Well, you should have total scholarship income on the return of $17,161 when you combine those two amounts. And it's reported for 2023, it's going to be on Schedule 1. If it's 2021, it'll actually be on Form 1040, but 22 and 23, it's on Schedule 1. Line 8R, you should have $17,161. Double check that that's correct. If it's not, you should have it, but we'll walk you through how to fix it, okay? If it is correct, perfect. We're still potentially wanting to amend the return because you might have money that you left on the table. So let's go look at that. But a lot of times if you put that information into TurboTax or another tax software, it should recognize that additional amount as income automatically. But some don't. So it depends on what software you used. So this is where the magic happens. You need to be careful on this part. For John, go look at the scholarship and grant detail. Okay, at the bottom portion of your 1098-T, and I just kind of typed it in on his here, just to give you an example. In the detail of scholarships and grants, these are going to be listed out. It's going to be like you've got a presidential scholarship from the school or whatever that scholarship is. The tuition scholarships are going to be totaled here, $6,306. And then you'll have a total of any grants, Pell Grants, state grants, whatever it is, okay? The rules for recognizing a scholarship or grant as income is if it's a strictly tuition-based scholarship, then you cannot recognize it as income, okay? So in this case, that $6,306 cannot be recognized as income, but that $12,865 of Pell Grants and other grants can be. So on this page, we want to put the total of Pell Grants, other state grants, and any other scholarships you might have gotten that aren't strictly for tuition. They could be used for housing, food, etc. Okay? If you're not sure, you need to do a little research. Okay? Look at the scholarship and grant and say, okay, I need to go find my award letter, or contact them and say, can this be used for things other than tuition? So, in John's case, $12,865. Then if it's a grant, federal or state, it's easy because those can be allocated to income. So good news. We can potentially increase your tax refund by recognizing a portion of your scholarships and grants as income. Let's go to next. Jane, on her 1098 detail, she has $4,700 in tuition scholarships, but $15,795 in grants. $15,795 is the amount that she can potentially recognize as income. So in this case, we've put in those amounts, and we'll see what happens, okay? Because they didn't initially claim the credit on the return because they had scholarship income, do all of the following apply to John? Does he qualify for the credit? Did he receive a Form 1098-T in 2023? Has he claimed AOTC, the American Opportunity Tax Credit, or HOPE credit on 4 prior tax returns? This isn't one where you're just, oh, maybe? No, because if you do this wrong, then you'll be prevented from claiming it for like 10 years. So you need to make sure, go back. Have I claimed this for 4 years? If you have, you can't claim it, okay? You have to be enrolled at least half time in a program leading to a degree, certificate, or other recognized educational credential. And finally, you're not done with your bachelor's, okay? You haven't completed your first 4 years of school. If you haven't, you can still claim it up to 4 years, and you can't be convicted of a felony. So if all those are true, hit yes. Same for Jane, yes. And then the scholarship, the amount of scholarships and grants recognized, here's another rule, cannot exceed your actual cost of living, okay? So recognized as income. So when we're trying to allocate more of our grants and scholarships as income, it can't exceed the actual cost you have. You can't be just cashing it away in a savings account. It can't exceed your actual cost. So in this case, to maximize the credit for John and Jane, they literally have to recognize $25,000 as taxable income, okay? If their expenses are less than that, if they're 20,000, we need to decrease the amount we're recognizing as income by $5,161, okay? The way you decrease it, because we have 2 students, it can vary. You want to maximize at least up to $2,000 for each student, etc. So that's where you could use professional help in this case, as well as understanding how much do you recognize for each student, okay? So, but in this case, their expenses actually were above that $25,000, so no adjustment needed. Let's see how much you can save with this strategy. So first of all, now John, instead of $7,492 of scholarships income, he wants to recognize $11,492. And for Jane, she wants to recognize $13,669. Okay, so many of you might be thinking, okay, I know FAFSA is based on my income. Okay, so what effect does this have? I'm increasing my taxable income with these scholarships in 2 years. When I apply for FAFSA, is it going to affect this? Well, the FAFSA application, you need to make sure to take this into account. You're supposed to decrease whatever income you're reporting on the FAFSA by any taxable scholarships and grants. So you get to subtract those out when you're doing your FAFSA, so it shouldn't affect it. But you need to make sure you subtract it out when that calculation's happening. Tax return information. Okay, we need this because if your AGI is too high, you can't take the credit either. So in this case, their AGI was $49,020. So you're just looking at your Form 1040 line 11. And then what was on Form 1040 line 16? How much can we save in tax by applying this strategy? It was $2,132 was tax owed by this couple. Enter tax due as negative, and this was because those additional scholarships, they actually owed tax, right? And then state tax, they owed $359. Okay, so minus $359. Put in the state marginal tax rate, okay? So in Utah, it's 0.0465. The reason I have you put that in there if you're in a higher tax state or whatever it is, because then we can estimate, okay, when we recognize those scholarships as income, while it gives us a bigger credit on the federal side, we're actually going to owe a little more state tax based on that additional income, okay? So before applying these strategies, they owed almost $2,500 in tax. Now let's look what happens if they apply the strategies. By recognizing that additional income, they now can recognize $4,000 each as net qualified education expenses for the American Opportunity Credit. So whatever software you're in, that's would be the change you'd make, is now you're recognizing $4,000 each instead of zero each, which it was before. So you recognize that $4,000. Here's your total estimated tax savings with this strategy. You get a non-refundable American Opportunity Credit of $2,132. What that means is the non-refundable portion was actually $3,000 for this couple, but the non-refundable portion can only offset tax you already owe. That's why you put that in. You owe $2,132 in federal tax. That is being offset by this credit, okay? And any increased tax, most of it's being offset by that $3,000 that's non-refundable for this credit. Then you get $2,000 refundable, meaning even if you didn't owe tax, if you're a lower income student, you could still get, well, at least this couple could get $2,000. It's $1,000 per student, right? You are paying an additional state tax of $372. It's actually a little bit more for Utah because you phase out another credit, but that's the estimate based on the marginal tax rate you put in, okay? Total tax savings, $3,760, okay? By applying this strategy, what did they do? They actually recognized more income on their return, but it allowed them to take this big, a $4,100 American Opportunity Credit that they didn't qualify for before by not recognizing that as income, okay? So, $3,760, if they're in a no-tax state, Washington, Nevada, no income tax states, that's over $4,000 in your pocket in 1 year for this married couple, okay? Again, the situation is going to be different by student, but hop in here and do an estimate for yourself. Email if you have any questions. If you're stuck on a certain part or wondering if you qualify, shoot an email and we'll help you figure it out if you qualify. But hopefully this helps you. And go through, hit next, and submit so you get an email with a breakdown of all your responses, and we will go ahead and do that. If you found this useful, if you are a parent and you have kids that are in school, make sure, and you claim them especially, this may apply to you as well. So if you know of undergraduate students, millions are missing these credits, and this is the number one reason. The scholarships and grant issue is number one reason I see of students missing it. So go through, claim the credit, okay? Go find the money that you're missing. If you found this useful, please share it with others. Please subscribe. I'm going to be posting videos like this every week, not just on student tax stuff, but how to become a financially secure individual throughout your whole life and not have financial trouble. So like and subscribe, and we'll see you soon.